Hey, greetings everybody. It's Jeff Scott here. I had actually a couple free hours, so I thought I'd go ahead and do a quick review. I titled today, Will Profit Taking End the Santa Claus Melt Up? It's the 29th, it's 9:45 in the morning, and obviously at that point, there are no futures available. Not necessarily the best week of the year, I think, to be planning to go long. I'll talk why, or short maybe because of the low volume. Strange week with a middle of the week, Christmas and New Year's. Tuesdays become quiet because of travel. Thursday, who wants to go to work the day after the holiday? And then Friday, well, who's going to go back to work for Friday as an employer? It's actually some havoc with the schedule. Most of my employees, I think, are working from home over these 2-week period of time, as have I. So anyways, I'm going to spend some time looking at year-end performance, talk a little bit about where I ended up, and a little bit looking towards next year and how I might get ready for it. Thanks for joining, and if I forget to say, happy holidays to everybody. The Hgsi world really evolved around Ian Woodward, who we lost a few years ago. I've tried to carry on the torch, as has Ron Brown and others. George Roberts is a proprietor that had built the software to support a lot of Ian's ideals. And I enjoy talking about Ian's work because to me it keeps him alive in my mind and my heart. What a great guy, and I owe so much to him. He used to always ask for my first million. Probably deserved it. The sessions for educational purposes only. Any recommendations are in the spirit of education, not investment advice. I'm a doctor, not a broker. I'm independent. I pay for the tools that I use, and trading involves risk. You and you are solely responsible for any investment decisions you make. I look at education as employees. If you are a trader or want to retire and be a trader, your employees are your tools, and your tools are both technology and your knowledge. I continue to invest in my knowledge, whether it's access to websites that I pay for, news sources that I pay for, or even live meetings like Mark Minervini's live meeting that I went to this year and will probably go to again in a couple of years. I also do some live meetings myself and try to balance my learning with helping others as well. Speaking of my learning, I always like to go back to my roots. I learned canceling by reading O'Neill, subscribing to Daily Graphs, Investors Business Daily for years before they were available online. I met this guy here, Ian Woodward, at a telescan session, and I followed him as he became independent and then worked with George Roberts to develop Hgsi. Ron Brown, who finds similar stocks to me, makes a lot of money trading, and was in the audience with me at many of those Ian meetings, became Ian's business partner. Gil Morales and Chris Katcher, the O'Neill disciples, took some of O'Neill's work and made it even better. This is my buddy George Lee in British Columbia, great trader. I share the podium with him a couple times a year. Once you decide what you're going to buy, how much do you buy, how do you set your stops? Van Tharp is sort of the king of position sizing and money management. Sagar has some great tools with superior profit, both from looking at market and rotation, but also some indicator sets for TradeStation and Metastock. Become friends with Sagar as well. And then my buddy John Person, who is one of my favorite educator, trader, gurus that are out there. He's got some great books. I've listed 2 of them. I think he's about to finish the update to the yellow one, which I know he's been working on for a long time. I use his tools in multiple platforms. And really, on the left were the ideals that help me find the stocks, create the list. And then on the right are the tools that I use to actually take the trade. Now, we'll be coming out with a add-on shortly. I'll just say it's from my favorite guru and leave it at that. And hopefully there'll be success with that add-on, and we'll be able to entice others to help us create add-ons of their work. This add-on will be a paid add-on. I'll talk more about it later. I have a lot of tools on my desktop. If I have just TradeStation, Thinkorswim, Hgsi, and EdgeRater, I can be happy. The other tools, the Qs, I would like to have their tools as well. A lot of other things I have help me make money, but they're less critical or essential. If you don't already have Hgsi, I highly recommend it. But let me just warn you, without a little bit of education, you probably will not get anything out of it and will not continue a subscription. You can get that education by reviewing my videos that are online, Ron Brown's. And if you do subscribe, hgsidoc@gmail.com, which is my email address, I have a number of videos I could share with you of how I use the program as well. Free 30-day trial, no credit cards required, and under investing strategies, you'll find some of those mentioned videos. Stock patterns are cyclical. This has been a year of saying we're rolling over, but the minute we roll over, we get another leg up. And this has been an amazing year, but except for the last 6 weeks and maybe some early in the year, we didn't feel like we're just going up every day. This has felt like we're going up every day. The issue is, was Friday the last day we're going up, or was it just an aberration? We've got some more time to go. I think the level of risk is raising here, and therefore I have, again, started to sell off some positions. Now we have this thing called January 1st coming, and I am a private trader. I do not trade as a business, although I probably put on more trades than most people that do trade as a business because I have a day job and a big income there, and it's hard to justify that to the feds. So I have tax issues. I have some positions that I'm looking to sell in the beginning of the year and defer my tax payment. I bought some toys. I might want to sell some of my Amazon in the beginning of the year to pay for them, but that will create a tax burden. So I have to expect that I'm not the only person who's sitting on gains that may look at the second, third, fourth, fifth, sixth, whatever the Monday, Tuesday, Wednesday of next week as opportunities to unload. So I'm expecting us to go through some rockiness. I also expect over the next 3 to 5 days of trading to be low volume, which adds to that volatility. So I prepped for that. I bought some volatility a week ago, some VXX, and again, I've started to lighten up a little bit. Do I think the market goes higher from here? Absolutely, yes. I just think it's going to be a little rocky to get there. Now, one of the reasons why I had such a good year in 2019 is the chart on the left. And why do I say that? Because first, let's look at the percent gain. These are gains measured from 0 to 200%. The increments per line is 20%. Typically, the increment per line is 1 or 2%. These were outsized gains. What I'm looking at here is the gains versus ERG. ERG is an Ian Woodward term where you add the EPS rank, the relative strength rank, and the group rank together. What this chart shows is that and I always take away the last data point because the number of stocks with that data point is quite small. And whether I take away the last data point or the 2 last data points, clearly you see a beginning of the low ERGs having returns of 20 to 30%, and the high ERGs having returns of 40 to 180%. So this has been a year of high ERG investing. I am a high ERG investor. I look for stocks with good earnings per share growth that are outperforming the market, meaning high relative strength, and in the best performing groups, which is group rank. The most remarkable thing about this picture here on the left is this is using the fundamental data in the stock market on December 28th of 2000, or 29th or 30th, the last trading day of 2018. That means the stocks that had high ERGs on January 1st ended up outperforming despite market rotation, sector rotation, misses and hits. So that is partly why I had a good year, and hopefully you did as well. If you look over the year, relative strength still was one of the best performers. High relative strengths in January outperformed. Earnings per share, it's interesting, it wasn't the highest group that won, but typically we get a low earnings per share growth group and a high earnings per share growth that win. Why would a low earnings per share growth win? Well, if I don't make earnings, what's my PE? And a lot of pre-earning stocks trade very expensive. So again, my kind of year. Last week, my kind of week. S&P 500 was up 0.5% last week. That's where I always start my math. Then I look at the IBD 50. The IBD 50 last week was up 0.68%. 30 out of 50 stocks were up. So I know that growth did okay last week. Then I mosey up here to the top, and I see, not the top, that would be obnoxious, 2.44% on my stocks. Now, all that says is if I bought equal dollar volume and not options, then I would have been up 2.44%. That doesn't mean anything to me because I do leverage and things like that. But what it means to me is that that's 4 times what the market was up. It was a very good week. And I hope you had a good week as well. Now, Friday ended with a whimper. The week, as you'll see, was up for the large stocks, but not all stocks. Not all sectors participated. Friday was clear both rotation into some of the more cyclical, but also Friday, or more defensive stocks rather, but also Friday was clearly a profit-taking day. When I say rotation, look at staples, mostly green. Look at utilities, mostly green. You should see some real estate, mostly green. And that's what I saw, and that was different than the rest of the week. If we look at the major markets as we go into the end of the year, let's go look within Thinkorswim itself so I can blow things up. And it's much different than last week? I don't think so. We end the week with a new high set early on Friday and we sold off. Is that a spinning top and the market's going down? Maybe, maybe not. Notice the volume was higher on Friday than the rest of the week, but it was still a low volume day as most of the major participants are out in the Hamptons or other places, probably down here in South Florida. So again, looking at a year, closing on the last Friday with the high of the year. Same thing exactly on the NASDAQ. More of a shooting star on the Dow. Again, this is what all these could be evidence of a potential reversal candle. Continuing down, the Russell also set a high, but boy, a bearish engulfing pattern that took out the last 2 or 3 days. That's a very bearish candle. Again, perhaps to be concerned, perhaps it was just profit taking and rotation after a huge month for the Russell. The VIX moved up a bit, but it's still below its major moving averages. And lastly, the dollar sold off hard on Friday. So that'll give me a little bit of context, and rather than going individually through the weeklies, I'm going to go back to my PowerPoint because it's quicker. And you can see on the weekly lower left, upper rights across, even to some extent on the Russell still has to work off its highs from October of 2018. You can see the VIX is in the lower part of its range and the dollar is still above its 200 weekly moving average. Now, I said the rates were steady. In my mind, they pull back a little bit this week, but they're still clearly in an uptrend off of the bottom. The other thing that's nice about the rates is the spread between the 2s and 10s has continued to widen, and you're not hearing any talk, at least I'm not hearing any talk from any reputable sources about a recession. I've always thought it's hard to see a major pullback or correction with AD lines at new highs. And whether I look at the Russell 1000, the large caps with its respective ETF, or the small caps with their ETF, the AD line is setting new highs. And notice how the Russell's rapidly catching back up, which is nice to see. Still has a ways to go to catch up to its prior high. The the NYSE, new high, new lows, also a new high. And you can see a little tick up on the bonds with the interest rates easing just a tad. What about breadth? Well, last week I said we're getting close, but we weren't at an overbought extreme. We really didn't move at all this week. In fact, it was just a little sideways nubble on stocks above 200 and above the 40. And on my 13-week or 3-month new high, new low, we came down a little bit. So we're getting close to correction, to overbought correction territory. We're not there, and if anything, we eased off some on Friday. Now, as much as I'd like to be excited, and I can look at the daily summation index, and it almost looks like we're getting above that prior high. But look at the oscillator. Clearly, we have divergence here as we get newer and newer highs on the daily McClellan and the same on the weekly McClellan. So there's definitely some something smelling in the markets, and eventually that's going to come home to roost. Bucket, 70% of the stocks in the S&P 1500 are above the midline of their Bollinger Bands, yet very few stocks are above, so not at an overbought reversal sign. We had no Hindenburg omens firing since the end of November. I would expect to see those, or I would hope to see those, before any major correction. This is folklore. Not everybody believes it, but what I know is that you haven't had a major correction since the Depression without a series of Hindenburg signals firing before. Market tone, let's look at the Woody indicator. Green is bullish, and you can see we've finally gone to a bullish posture. Obviously, you've watched your portfolio go up every day. You know what bullish means. Sector strength has improved. You could see still the defensive guys despite some strength on Friday. The staples, utilities, real estate, and actually industrials is the other that's yellow. Nothing is red on the Woody indicator on sectors. The canaries, here's the list up here. Obviously, Priceline is called booking. Someday I'll update the graphic there. It's been updated within the chart. And you could see that we broke out of resistance here, and we are at all-time highs, but we have a red candle high at the high jump signal. More to follow about that meaning. But this is melt up. You look at the degree of ascent, and that clearly changed. And it's typically these last couple of days of almost vertical that you see before market rolls over. Looks like we might be getting close. Know your news and earnings. Well, the surprising thing to me when I looked at the news was that there's some red dots here. And this comes from Econoday. Unfortunately, I put the wrong reference. That's the Bloomberg reference. The econoday.com. I use this as a great guide. Red tells me it's a big. So we got some trade. We've got some consumer confidence, jobless claims in manufacturing, and petroleum. So we have some big news this week. We also have some FOMC minutes coming out on Thursday. So even though this is a shortened, low volume holiday week, there's some real news. Now, usually I have my earnings here, but I did a little bit differently today. But it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. Obviously, not a lot of earnings this week. Here is January. And I thought I would put this out because we're going to have some fun. Now, if you want to look at seasonality and when are there certain stocks here that you might want to play because of seasonality, it's nice to know in advance. And I could tell you that our old favorite here, Netflix, is on the 21st. Now, typically, and I'm sure because it's a white box, the 20th is usually a holiday. And and earnings come out on Netflix in the afternoon of the 21st. So I typically get very active, and the 20th obviously is Martin Luther King's birthday. But Netflix, Tesla, PayPal, Amazon, this is the week. Amex, Apple over here on the 29th. So you have to know when your companies have their earnings dates. This is not all inclusive. This is a list of some of the major stocks from earningswhispers.com. If you're a Twitter user, just search for Earnings Whispers, and you'll get all kinds of free information. I have a couple of asks for you. You know, I do this almost weekly. Every once in a while, I get trolled by somebody on YouTube, and I start to think it's time to quit. And then you guys come out of the woodwork telling me how much you like this. Some even offer to pay, but I don't want to be paid because that changes my status. Here's what you can do for me. Please subscribe on YouTube. I don't get money for that, but it keeps you aware when I post of issues with other vehicles that I send out information on. If you like these videos, please hit like on YouTube. My wife says I do this for ego gratification, and I do look at those numbers. If you can help me out with either of the following, please email me at hgsidoc@gmail.com. If you know a program or macro that will take a list from Excel, seasonality, and place in Outlook or other calendars, please let me know. The functionality within Outlook isn't working for me. Does anyone have access and will share with me the year-end copy and going forward? It's called the Informed Investor. You'd have to typically have an account at Piper Jaffray or be a investment professional. I think the guy's Craig W. Johnson. It's the best analyst piece. I have First Call. I have Thomson Reuters, which is First Call. I have FactSet, and they don't place it there. So I'm looking for that. I get a lot of questions about the new add-on. So it's a built-in, it's a partnership with one of my favorite trading and education gurus. You probably know who I'm talking about, but as long as I don't tell you his name right now, you can't hold it against me. Costs will be determined in the next week. It is essentially ready for release. Now, go take a look at metastock.com and look at their add-ons, and that will give you a sense of what an add-on would cost. It would be an annual subscription. All monthly will be available. It will include multiple new functions in HGSI, buy, sell signal scans, chart views, etc. I will commit to as long as I'm in the business, which is, unless I die, will be a long time, will be a monthly non-public, meaning a limited access education on how I use the tools and some of the new things I develop, and a discount on my Palm Beach meeting, and maybe a few other ideas that I have, but I have to get permission from the guru. Market thoughts, another strong week, ended with profit taking on Friday. The indices diverge on the week with the NASDAQ reaching 9,000 for the first time. Thank you, Amazon, which finally joined the rally. S&P 500 was up 0.6 and Dow was up 0.7, also setting new records, while mid caps and small caps were down slightly on the week. A weaker dollar, as I showed you on Thinkorswim, may support commodity pricing going forward. This means gold, silver, and oil may be in fuego. Major markets are poised to end 2019 as one of the best years in the last 20. NASDAQ is currently up 35% year to date, S&P 29, Russell 24, and Dow 23. What a massive year in the market. I hope you're up more than the NASDAQ. I'm up, not quite, a little bit over twice the NASDAQ is where I'm going to end up the year unless I have a surprisingly strong week here. A great week and a great year, and I hope you're making money too. Profit taking started on Friday. Winners sold and markets rotated. We'll have another low volume week on tap as we end the year. Many are calling back for a pullback after the first on tax gain selling. I think we're going to see something, but a lot of the pros are mark to market, so they don't have the same issue in January. I've had a great month to end another great year. My model up about 70%. If I include my Schwab account where I had mostly Hgsi in it, it's up a lot more, but I've started to take profits and may protect some of my big winners with puts if I do not cash out by the year's end. We're not going to do my typical agenda. I'm going to do a little bit of the top-down approach, but I'm not going to go into a lot of stock fishing because, frankly, I'm not sure it's a great week to be buying stocks. I think it's a great week to be looking at your positions and making some plans upon what you want to be doing in the new year. And I'll talk about some of the things that I've been doing as well, if I remember. The bad news about not doing these live is you can't be asking me questions and specific stocks to look at. I'm going to start with this. I asked if anybody had access to or idea of a program that could basically import this information. Let's see if I can make this bigger. directly into Outlook. So I've gone into a couple of my seasonality programs, and I've made a list, and let's go to by start date, of some of my favorite stocks and when they might become entry dates, exit dates, how long I'm holding it, the likelihood of winning, how many years have they been trading, positive or negative, and then what's the profit percent, and then rating. I always like to talk, as my favorite is Netflix, which I'm currently in because I think it starts earlier now, although I'm not sure I'm going to hold it through earnings because I think there's more risk there with Disney. But Netflix, for example, has been up 14 out of 15 years. If I go into Thinkorswim, and this is not Seasonality Trader or anything else, this is a Dr. Keith, seasonalitytrader.com, sells an indicator, and I kind of like it. Yes, I spend a lot of money on indicators. I admit it. I need to go to Indicators Anonymous. The white is projected move with seasonality. The blue sort of is more reflecting of where the stock is today. It is almost following perfectly its seasonality, and you could see it's in spike up mode. But you can also see the move actually, in my mind, starts, a week or two ago. And I am in Netflix because of that reason. So what I do is I create this spreadsheet on an annual basis, and then I may manually, 1 month at a time, in a new Outlook file, put in the name of the stock, entry and exit dates, and then number of days, wins, profit, etc. So at least forces me to go and look. I believe in seasonality. There are some neat programs out there. Let's look at one that I subscribe to. I don't know if I can remember my passwords. This is financial.com. Let's just put in, I don't need any more of this. Let's sign in. Let's see if this even works. I had some issues with my password. Nope. Let's put in Netflix. And let's look for the seasonality of Netflix. And let's look for the best period. And you could see that Netflix's best period is right here. And it has you going into Netflix on December 27th, and that it basically runs up here, and it says basically probability of a win is 70%, projected to rise by 24%, average of 31.69 during this 13-week period with a track record of 76%. If I want to narrow that down to just maybe a 6-week period of time, just take a little bit longer to figure this out. Oh, I must have done something wrong. Well, the bottom line here is should do it right there. Yeah, I must be doing something wrong. But the bottom line is Netflix is in a strong season, and that's why I like it. And there are lots of programs out there. This is one of them. It's called Financial. It's telling me different stocks, when their best time is to buy and sell. Here's the seasonality. These are stocks over the next 7 weeks that have a move that's consistent 80% of the time. They just had a really good sale on this, a really good sale. and that's why I picked it up. There's seasonallytrader.com, magentatrader.com, best choice. Pick the one you like. I have a lot of them. Sometimes I worry about sustainability. That's why I have duplicity. So if somebody can help me out with that program, I'll share with them my list as well. Don't bother asking for it without it, because I'm probably not going to just give it away. It took a lot of work. Here's looking at the seasonality, looking at by profit percent, who's got the best percentages and when. Again, entry and exit dates. What percent were all bulls by profit percent. This one here was by rating, and this one here is by win percent. So I've tried to break this out, but it really comes down to start date and looking over the next couple of weeks and seeing if any of these stocks might be setting up. And when I get a winning opportunity in both technicals as well as seasonals, I get excited. I think one thing that John Person has taught me is that technicals still trump seasonals. I'll wait till I get a buy signal. What else do I want to do today? Let's go into TradeStation. Last week I was very concerned about the degree of extension of the market. We're still extended, but we gave up some of that extension on Friday. So 6-point move. I look at my green versus red arrows in 3 time frames. We're in a buy in all 3. I look at the price bars. Blue is telling me it's getting tired. Blue is neutral. It's an Alexander Elder impulse indicator. Green, I can go long or short or hold. Red, I can go short or hold. Blue is neutral. I can do whatever I want. Blue is definitely weakening. So we have blue here, which is slowing down. I've got my MACD divergence dots showing up on every bar. Again, we're getting extended. If you don't believe me that we have MACD divergence, and yes, I showed this last week and people probably get tired of seeing it, but I have to assume that every week hope I have a few new users. And just to show you what I mean by MACD divergence, prices going up. And eventually if I do this enough, I'll get good at this. And MACD is clearly going down. That's typically precedes a market pullback. We still have a weekly bongo. We're at the top of the envelope, which is also concerning. We are at 94.93 on the extension. That means we are more extended than 94% of the days of the last 200. And usually when I get above 95, we start to see pullbacks. And if we just back up a day, we were at 100% on Thursday. No surprise that this market pulled back some on Friday. The Dow is at 95%, and that's the high, I believe. It was 97 on Thursday. The NASDAQ closed the week at 95, and the prior day on the NASDAQ was 100%. And then the Russell, which has been the weakest, although it had some very recent relative strength and outperforming. Let me get the right one here. As you can see, if I go back one day on the Russell, it was at 99.70 and it's pulled back now to 91.08. So we've come off the super extended, but we're still extended. I mentioned high jump and reversal. Guess I forgot to put that into my PowerPoint. So let me think about this for a second. I don't think I can bring it up. Let's see. Nope. So let me just pull it up in the primary program. At some point, my computer is going to slow down. I got Thinkorswim open. I got TradeStation open. Now I got TC2000 open. I got PowerPoint open. I got Outlook open and my Chrome, but it's still holding out okay. Here's one of my favorite indicators that I put together. And this is my, this is an indicator I put together Those who followed Ian Woodward know about the high jump. You get the high jump by taking today's price minus the 17-day. In an uptrend, that's a positive number. Today's price minus the 50, another positive number. And today's price minus the 200-day moving average. You add all three together and you plot that number. And when you're at the high of that number, that would tell you that you are extended over how many days you were measuring back, and typically a year. Now, I said to myself, if the price is above the moving averages, those add up to three positive numbers, a big positive number. If the price is below the moving averages, and I look at the, not the absolute, but the actual number, I'll get a bigger and bigger negative number. So don't I have a thing called a low jump bar? So then I created an oscillator that goes between the high jump and between the low jump. And it turns out if the high jump is oftentimes of a market reversal, then maybe the low jump is as well. Now, I can only tell you in an uptrend because I've only tested it back through 2007. But clearly, in an uptrend, when I have a stock that pulls back to this green bar, which is the low jump bar, telling me it's the most extended to the downside in the last 200 trading days, and then I get a reversal candle, it is a buy signal. Let me show you some examples that I've reviewed earlier in this group. CMG. I like CMG, but I'm not going to buy CMG up here. But I sure as hell bought it down here. And if you look at what happened here, CMG kept hitting the low jump bar. On this bar here, it reversed. It hit the 200-day moving average. It closed much higher than the prior day, and I bought at the open the next day. I took a little pain and then off to the races with a big gain. To me, very high probability trade. One of my, I got to say this correctly so it doesn't sound right. One of my wife's friends, who's also my friend, who's a girl. So that way I could say a girl who I'm friends with without saying anything incriminating. She has held Shopify for a while, and I always look at it and go, when am I ever going to buy it? Well, I'm watching my computer one day, and Shopify, what a great company. They really benefit from all the non-Amazon online trading. And lo and behold, what happens multiple times? When it hits this low jump bar, it may not be that day or the next day, but it becomes a good opportunity. How do I tell the difference between choppy things versus the ones I want to buy? It's when you got a moving average in play. So I'm sitting here and I see on my scan that on this day here, it hit the high jump bar. Notice the dot that formed there. And the next day I had a bullish engulfing candle off the 200-day moving average. But Jeff, it ran so much up, it's too late. Really? I bought in at 295. It's currently 408. We've had a 40% return in 33 days. And I bought options so you can multiply that return by a lot. If you don't believe me, what else did I do this year with this? Let's pick something. It was Restoration Hardware. It didn't give me the signal. It gave me here, but it was a very short run up, so I don't count that one. But let's look at the other way. Let's look at the S&P 500. The S&P 500 right now is really stretched. Let's look at the spider. Look at how stretched we are above the high jump bar. Let's look at the diamonds approaching the high front. Let's look at the NASDAQs above the high jump bar. Let's look at the Russell just coming back in, shortable potentially. So this signal works on both ways. Let's look at biotech. Biotech is maybe breaking down. I told Kathy, that's the one I was mentioning 2 days ago. I told her to sell her LABU, and let's see, Hold on a second. Now, I told her that this email here is going to cost her dinner for my wife and I. But 48,000 short-term gain in Lebu doesn't suck. I called her up. I said, it's time to sell. Why did I say that? Because I had a high jump bar triggered. I had a reversal candle. And I told her get out at the opening here. So I find this to be a very useful tool. And every day I get the stocks showing up. Community Healthcare Trust. This looks interesting to me. It's a REIT, so it's defensive. Looks interesting. Pull back to the 200. Hit the low jump bar. Reversal candle. I might wait for it to take out 42.55, but I like it. M&I Homes, not yet. Why? It's not sitting on a major moving average. It doesn't have a clear reversal. It might be setting up one with that doji. Medic Nova Biotech, too far down in its pattern. I want things that are pulling into a major moving average. So the only one I really liked here is CHCT. I also can look to the other way, and I'm just going to go through very quickly, and you're going to get a sense. Market, Wilshire Market, NASDAQ Global, Value Line Arithmetic, Dow Jones Total Stock, NASDAQ Composite, S&P Pure Growth, FANG Index, S&P Completion, NASDAQ High Tech, NASDAQ 100. I mean, not one of these is a stock. They're all ETFs of the market. What does that tell you about the market? Yeah, this market's really overheated right now. Look, you can get these clumps for a while. When you start to see them, you get a pullback. I wouldn't be surprised if we don't see a Hindenburg's tomorrow. If there's enough volume, that might be the limiting factor. So that's something I don't talk about every day. I showed you my seasonality chart that I work with. Let's jump into HGSI very quickly, since that's really the reason why a lot of you are here. As I said, I don't really think today is a good stock picking day, so let's just talk a little bit about how I would be approaching if it was. So I start with Major Markets Plus, which is a major analysis user groups, comes from Ron Brown for free. Top-down view, and I make sure I'm ranking by rock combo, and one notices that the gold miners are right up at the top as with volatility, utilities. That tells you that we're in a market that's a little bit more dangerous. The dollar was weak, biotech, semiconductors, the Russell. Boy, that's a lot of growth things. I'm surprised I didn't lose my shirt on Friday. Let's pull up some things. Now, just to be honest, I make money in the market. I'm pretty open about that, and I think people that have been to my live meetings, I've shown you my counts and my examples, see that I do. But if you make a lot of money in the market, you're taking some risk. And if you're taking some risk, you're going to have some really bad days. Wasn't one of those on Friday, but I thought it might have been. And I have them. Of course, I don't tell my wife when I have those days. All right, so not much to say about the major indexes except to say in HGSI, I don't have the oscillator. All I have is the high jump count. When it's at the top of the count, you know you're extended. When it's at the bottom, you're extended to the downside. But we use the absolute number. So that absolute number doesn't work when you compare it to other stocks. I'm going to talk to George about recreating what I do in TC2000 in HGSI. I think it's very valuable. And all it will be doing is taking the current indicator and comparing it to the last 200 bars, the highest or lowest, and then what percentage of it is that number. And we've got a red candle high at the high jump. That's a extension. That's a concern about risk of reversal. That's a caution. Asterisk, year-end rally time. Maybe none of this matters. I'm still cautious. If I look at the Dow Jones Industrial Average, Notice low volume days because of the holiday. Similar picture, but not, it looks like a red candle high. I don't know why it didn't trigger. If I look at the NASDAQ composite, clearly a red candle high at the high jump, low volume day. They all show the same thing, a market that's had a huge run up. The Russell, a bearish engulfing reversal, 2 red candle highs at the top, much more serious looking, which is why I should have left that open. I bet TZA looks interesting. Hint, I already looked. If I look at things like the dollar got hammered this week. Guess that counts as hammered. Down strong. Look at the weekly down. If I look at the VIX started to rally. Now, apparently, let me see. I can change these thick things are buy sell arrow, and I've been told that I've been fixed. Let's see. So excited. Hey, they're simple little arrows. They might be too small to see on a white background, but there's an arrow there. You can see the bar there showing the arrow, and the red arrow somewhere too, I suspect. Yep, there's red arrows. All right. Thank you, George. Thank you, George. So volatility's moving up, had a buy signal come in. And then gold and silver, I think we know what they did. Gold itself, sideways on Friday, but a big breakout earlier in the week. Gold miners, big move. Silver ran up and pulled back a little bit, but a big move. Now, just trying to, they only have this trade. What I did on gold is I bought a call at 30, I sold a put at 30, and bought a call at 28. That lowered my price from $2.46 to about $1.50. I closed the bullish bear puts, the bullish put spread for 35 cents. So my cost is $1.85 net cost. So it's not the $2.46 because I bought it as a spread. It's now $4.30. So $1.85 to $4.30. Let me pull out my iPhone calculator. The power of an option is 4.30 minus $1.85 is $1.55. No. Let me do this again. 4.30. Okay, come on, Jeffrey. 4.30 minus $1.85 equals $2.45. But I only paid $1.85 for the spread. So I'm up 132% net, or $18,000 on the closed. And let me look at my phone. I can tell you how much I made on the other side of the spread. Not much. It was just, let me tell you real quickly. For whatever reason, the phone app actually gives me more information on Nugget. So I made about $6,000 on the other side of the spread. So that was a nice trade on Nugget. I've left the 10,000 on. I took off some profits. I think gold will rally. Having a trustworthy seasonality indicator, this is a weekly chart, in Thinkorswim shortens my trading time. Nuggets not been traded enough to give me that. Gold miners, maybe we got another week of moving up, and then I'll look at taking profits. All right, and silver also strong. Next thing I look at is industry groups. Warehouse view. There are 175 industry groups. I only have 22 groups moving up this week. If you think about the last couple of weeks, it's been 70 versus 15. I have other specialty retail, which is Michaels, GameStops, and Ulta, okay? REITs, tobacco, food and drug, large pharma, packaged products, telecom, beverages, integrated utilities, and household products, followed by net utility networks. Does anybody have a word for those? Yeah, I do. It's called defensive. Not what a growth stock investor wants to see. If I go down to 2-day down, I now have 51 groups: specialty pharma, biotech, oil services, communication, medical device, exploration, midstream, consumer electronics, application software, internet media, semiconductors, banks. What do we call those? Discretionary growth stocks. All to the downside. Let's look at 5-day down. I got 31, and 5-day ups probably a little bit better, 55. So on an intermediate term, we are clearly a little bit at risk, but maybe in a longer term uptrend. Now, if this was a normal week, I would go through the top 10 groups. It's not a normal week, so I'm not going to do that. Let's look at REITs. Change the index group. Double click. I've called American Power out the last 2 or 3 weeks. I've made my buy list again. Now, let me show you a little bit of this new package. And because, all right, so I've got the fatter arrows in there right now. These green arrows are now secrets out, person, buy, sell signals. They are similar, but a little bit different than TOS, TradeStation, or Genesis. They're a little bit different across each platform by design. They work similarly. I found them to be extremely accurate. You'll now notice if you have a high close doji on daily or weekly, it shows up in green. So it comes right to the top, so I know what I have. You'll notice here the person market catcher. If I go to I'm not totally done with these, so person daily black, and I'm hoping to get him to give me another volume indicator, but at this point I can't say that that's going to happen. I can only beg. I have pivots. This is monthly pivots. These are weekly pivots. I have last conditional changes. I have the buy signals. It's not the charting of why you're going to want to buy this package. Maybe it's my education support I'm going to give you. Look at some other things I can tell you. In American Tower, we know here it had a high close doji daily and weekly. Its chandelier auto direction is buy. And any of these can be customized, by the way. That on the day, Friday, there were 10 REITs that had new buys, only 2 new sells, and 67% of REITs in general in a buy, and 32% are in a sell. That's a lot of information. Let me go back to my chart until I get comfortable with those charts. The rest of that information is sitting down here, by the way. So here is American Tower, pullback to support. Now, wouldn't you have wanted to found it right here? Oh, I hate to do this, but I'm going to do it anyways. This is when curiosity kills the cat, and I'm asking a question that I don't know the answer. Would this have showed up on my TC 2000 scan? This is AMT, right? We have a winner. So I would have picked this up in November as it came down here, triggered the high jump scan. Now, when would I have bought it? Probably not to this bar here, because I would have waited for it to take out the high here, but it pulled down into that 200-day moving average, hit the high jump bar. So somewhere around the beginning of November, I would have gotten interested. Somewhere here, this was even more recently, in December. Here's the one in November that would have triggered it. But you had a greed candle buy hitting there. It wasn't quite at the low jump bar. But this is when we were talking 1, 2, 3, 4, 5, 6, 7, 8, 9. Yeah, we were talking about this on a weekend review 2 weeks ago. I still think this looks good. Simon Properties, it's hard for me to buy malls. Equinox, sideways move, looks like it wants to break out. And this is what I do. And green is good, blue is good, red is bad. Welltower, these have been beaten up because defensive stocks have not been the best to be in. But a lot of these pay some very sweet dividends. Typically, I'll go through using my signals, and those who've been with me know this is what I look for without even looking at anything else. Sitting on the 50-day moving average, a mobile breakout from a squeeze, a new person buy signal, and a kahuna occurring on the same day. That's what I look for. Those who've been with me know that I'm scanning for those, screening for those on a daily basis. Now, again, I don't want to give any false pretenses that this is a market that you should be going long on and all in. I think we're in a market that for the next few days may do anything, and then beginning of January, I wouldn't be surprised to see some profit taking. I did find some stocks to buy and sell, or we'll look at buying. A lot more than I expected, but boy, I'm careful. And just because I have them on this list doesn't mean I'm going to buy them. On industry groups, what came out? Several REITs, including American Tower. Variant is another one I liked. Why? Because it's sitting here, and I bet I put this in my group, which is called Waiting for a Signal. Let's see. Yeah. If I get a kahuna here or a new person buy signal, I might be interested because it's sitting on the 200-day moving average. It also is still above its weekly chandelier. What else? Biotechs. I'm in a couple of these already. Epizyme, I'll just talk about. It's in a big move. Look at Hgsi, where I made a ton of money on, and you could see that it's not one move and done. That Hgsi, this was a pretty big move here because if I go back some, all right, it was already having a big move from 21 to 48, and then it went from 48 up to 104. Got up to 100 and almost 110 intraday this week. So Epizyme, to me, is potentially could do the same thing. They've got one drug before the FDA and another drug that's very close. So I am in Epizyme. I am not in, but I may get in Immunomedics because they have a drug in front of the FDA now that looks impressive in breast cancer. So I use my knowledge of the industry to cheat and know what might be good. It's not cheating. It's now, those that know me know I have a pretty significant position in Amazon. I talk about it at my live meetings. What do you think paid for my toy? And I actually bought another car on Friday. I just got in a car and I loved it so much I had to have it. It's a AMG C63S. It's a little pocket rocket. I didn't want to leave the Cullinan at stadiums like I went to a hockey game last night, so I wanted a everyday car. My God, it takes a C-body Mercedes, it puts an AMG engine in it. It's got 500 horsepower, 0 to 60 in 3.8 seconds, and it looks like the lowest price Mercedes on the market. I call it my pocket rocket. Amazon broke out this week, gave back some on Friday, although it's still closed up on the day. If Amazon breaks out, this could be a big move and big driver on the NASDAQ. I think the jury's still out. It's got earnings in January, so I think it could run up into earnings, but earnings are going to be, well, they will be important. Let's put it that way. Netflix, as I mentioned, it started its move already, but a little bit of a flag here. That is not necessarily a bearish formation. It's not on big volume. You might play it safe and say, God, I really want to be in Netflix because of earnings, but maybe I wait until I break out of this flag to the upside before I buy Netflix. I mean, you're not going to hurt yourself waiting for you to break out of this channel. Yeah, it could gap up to here one day, and that would not make you happy with me. But it could also break down below the 50-day moving average. I gave Match.com a couple of weeks ago. I got a fax from dating myself. I still think Match.com looks great. Why would I like Match.com? I just got a, boom, Kahuna, pocket pivot, now I can tell you person buy, breaking above the 50 with a mobile breakout and a squeeze. Is there anything on that chart that isn't exactly what I like to see? It's run a lot. I still think it could go further, but it's a lower risk buy here than it is today. Anything else that really stood out? Here's another biotech-like stock, and I would handle this the exact same way I told you to handle Netflix. I am in this stock. I was in it before it moved up. They got an approval on a drug. They're going to start commercializing it this year. This is not a good, didn't do a good job on that. Let me take that one off. Let's try that again. But I would say that this is a high tide flag. I've heard different definitions about high tide flags. Could be a falling wedge the way I drew it, but I'm not sure I drew it correctly. That's a bullish pattern. It ran from 12 to 44, so 32 points. When it breaks out here, I'd expect it to go for 20 points from the high up to 65. There are a number of analysts buy targets at 65. Why buy it before it breaks above the wedge or before the flag, the pennant? But I think that one looks interesting. On the e-commerce side, a couple things. Nothing's perfect. Well, here's a stock that every time it goes sideways, I get mad at myself that I don't buy it. It's consumer finance, Fiserv, not cheap, 33 multiple. It has growth, which is unlike a lot of things in the market. And I can tell you, every time it's gone sideways, it's a buying opportunity. And what do we have on Friday? A Kahuna, a mobile breakout from a squeeze. That looks interesting. So here's my list. SBA Communications, they built the towers. I think they're going to have a lot of work to do with 5G. So a couple things to like. One, you have a high closed doji. 2 bars here actually, closing above the high of the doji bar within the last 3 days. That's why that turned green. Very bullish. We're going to have, we have a couple Kahunas in a row. Mobile breakout from a squeeze, breaking above the 50. You know what I think about that. It's pulled in a little bit. What would I do with this stock if I was to trade it? I would trade options. I wouldn't buy the stock. I like options, plus it's an expensive stock. That's not what I wanted. So the high of the day was 241.85. So I would look for probably options. I don't know if there's a 242.50, but I might set my buy stop around 242.50. Where am I going to set my stop? Well, why would I go? I'm buying it because of this 50 here. So the 50 is at what? 236. I'll take it down to 236.75. be my sell stop. All right, now I can look at my TradeStation calculator here, meaning my phone. I could do this in my head, but why bother? I'm an old man. So we got 242.50 minus 236.75 equals, I'm risking $5.75 into a 242.50 times 100. I'm risking 2.37%. Why? I could bring my stop all the way down to here, but I don't like to take that much risk. To me, that's a very safe trade. I don't take it until it breaks out. It's closer, it's a little bit below that, probably around here. If it breaks down to this level, I might get in. I've got a very tight stop, small dividend, so I don't care about that. Huge earnings per share growth coming in, and it hasn't run away from my buy stop. So that's how I look at stocks. What else did I want to cover? Is there anything else I want to cover today? I showed you my TC2000 stuff. Oh yeah, here's the last thing I want to cover. I don't spend much time with scanning on my weekend reviews because I really do a bottoms up approach on the weekend where I look at hundreds of charts. That's not what I'm going to do during the week because I don't really want to spend as many hours on the week on a Monday night as I do on Friday, Saturday, and Sunday combined. So here's how I use scanning and why I'm so excited to have my favorite guru stuff coming into HGSI. I'm calling it Pug Views. And I've put together a number of bullish and bearish stock scans. You don't have this yet because you don't have the indicators. I might start with how many stocks on Friday. And let's go into all securities. How many stocks on Friday had a person daily buy? A new buy, only 33 stocks. How many of them had a new person sell? I mean, that's, yep, that's where I want to be. I had 195 new sells. So right away, that should make you a little bit concerned about the health of the market. How many weekly sells did I have? I had 56 weekly sells. I had 86 weekly buys. As I said, the longer time frames are a little bit stronger than just the last couple of days. Now, if a daily buy is important, I could look at all of those. But maybe I'm interested in a daily buy near weekly support. So I've got 5 or 6 stocks that are a daily buy near support. Support's right in here. Why is this important? Because I might be interested in pullbacks. That's a support right there. I might be interested in pullbacks into support. Maybe I'm interested in daily buy while the weekly is in a buy. I've got 17 of those. I think most of us could look at 17 stocks on a weeknight. I don't know anything. Mr. Cooper used to be a tire company. Now it's a finance company. And you have a buy signal. Let's go into my other. I've got to merge my old and my new charting techniques. Pull back to the 50-day moving average, a Mobo breakout, a Kahuna. All it's missing is a squeeze. This is Mr. Cooper Group. All right, maybe I'm interested in PPS buys and the chandelier flipped today. So this would be somebody that went through its stop with a buy signal. Now I'm going to rework with this to have the last conditional change, but I've been using this very effectively. I looked at new weekly buys. How about a new daily HCD? A lot of HCDs today. How about a new HCD with a new buy? Now, an HCD, if it's true, occurs in a stock that's in a downtrend. You get a bar that closes above the high of the prior doji bar. Since you're in a downtrend, a lot of times they look like this. This might be a little early. It's a REIT, no surprise, with a 2.8% dividend. All right. Weekly HCDs, we had 300 at the end of the week. Now, this is a different number than what we see in Hgsi, in TradeStation. And I think the reason is this. TradeStation would only count this once. This doji within 3 bars, close above it. I guess it's this doji. I guess this is a new one here because it traded up, closed above the high of the previous one. I think we're overcalling it, so I have to work with John and see if there's a way to filter this down. But that was more than I see on TradeStation. But I think it's because when you have a weekly doji last week, you can still get one this week, 2 in a row. You may not do that in some of the other platforms. How about a weekly HCD and a PPS buy daily within 2 days? This is one of my favorite signals. So here's my doji. Here's my close above the high of the doji. Not exactly a downtrend, but a sideways move. This is a high close doji bar. That's a positive. And a buy signal within the last 2 days. That might be something I put my lines on. When it breaks above the flag, I might want to buy it. Hormel, I don't even know what this one looks like. But by definition, I should have had a buy signal within the last 2 days. Here's a buy signal. And I got a high close doji here, closed above the high of that doji. But it's in an uptrend, so it doesn't count. Anything here that... Clorox. Boring consumer staple. By definition, high close doji, close above the high of the doji bar. Buy signal 2 days ahead. Sometimes these are great buys, sometimes they're not. I am working on additional scans. Let's go up here. What do you see in my view? You see how many of them had a PPS buy signal today. So if I go into, it should be all of them. How many had a sell today? All right. The last sell signal would be, I didn't have a signal today, but everything is in a buy or a sell. I don't know why Voya is not in a buy or sell. Well, that one I hit the wrong one. This one. Oh, because it's too new to be in a buy or sell. Okay. Unless you're brand new, everything's in a buy or sell. So this column here is whether I had it today. This would be my current signal. How many days ago my signal changed. So here's a stock that's been in a buy signal now for 49 days. So I bet it's going straight up. It is. Wouldn't you like to have been in this stock? Yeah, me too. Then I have high close dojis. So if I go to the top, I should see, oh, all right, I'm looking at a bad list. I'm looking at low close dojis new. I'm not going to see any high close dojis if I'm looking at those that have low close dojis. If I want to see low close dojis, you can see here in red are all the stocks with a low close doji today. That's quite a few. I can see their weekly PBS signal, their current signal, and how many weeks they've been in that signal. Here's a stock that's for 38 weeks has been in a buy signal. I own it now, but I didn't own it for 38 weeks. And this, boy, would you like to be in that stock from when it was $15 or less? Then I have what percentage of the stocks in their index are in a buy and sell. So it gives you a sense, are they in a strong index or not? And then I've got the current status of the person market catcher. Didn't talk much about it today. I've got some questions of John of whether or not we've got the right descriptors in there. So I've put a lot in there, and I can scan on any of those. I have found these to be huge advances in my armamentum. On that note, I'm getting tired. You're probably getting very tired of hearing me. Happy New Year's to everybody. I hope everybody had a safe and happy Hanukkah or Christmas, Kwanzaa, or whatever your holiday might be. I don't ask to be paid. The only time I'll ever charge you something is if you're coming to a live meeting. I won't get money for this add-on except for some of the developmental costs that I put up. I hope you find interest. It'd be a great payback for me for people to add that to their armamentum. And as I mentioned before, if you have a program that can take my Excel list into Outlook or other calendars automatically, I will give you my list for free. And if you have access or will share with me a year-end and further copies of The Informed Investor, I would be deeply in your gratitude and share some goodies with you as well. Thanks, everybody. Have a safe and happy. Goodbye.